Okay, E12.7 says supposed income statement for Gago Company reports 95 net income after deducting depreciation of 35. The company bought equipment costing 60 and obtained a long-term bank loan for 70. The company's comparative balance sheet of December 31st is presented on the following page. The first requirement is calculate the change in each balance sheet account and indicate whether each account relates to operating, investing, or financing. And the second requirement says prepare a statement of cash flows using the indirect method. The first two requirements are what I'm going to show you in this video. This is where our focus is going to lie. We spent an extensive amount of time in class, as well as the book talks about the justification of the rationale for why we do what we do using the indirect method. The opposite effect for current assets, the same effect for current liabilities, and I've showed you in other problems as well, so I don't think we need to spend our time there. I'd be more interested to spend our time in actually creating the cash flow statement. Remember that the steps that we said to create the cash flow statement were threefold. Number one, we calculate the change in balance sheet accounts, right? Calculate the change in the balance sheet, and that's actually our first requirement here. Number two, identify those changes as either operating, investing, or financing. And that's also part of requirement number one. And three was to put it in formats for the statement of cash flows. And with the operating activities, if we're talking about the indirect method, then you have a sub-step there where you start with net income, add back depreciation expense, then adjust for changes in current assets and changes in current liabilities, okay? But this is our three-step process, and this problem guides us along that process. I've written for you out here the changes in the balance sheet accounts because I don't think we need to waste our time actually going through and calculating those together. You can look at those and you can add and subtract them just like anyone else can. So I've got the increases or decreases listed out here by account, and I've listed out also whether or not it's an operating, investing, or financing activity. If you're having trouble with that, refer back to handout 1 for the chapter 12. It'll help you label which types of transactions are operating, investing, or financing. I will point out a couple here. The first one that I'll point out is cash. Notice how cash is NA next to it. Why is that? Because cash is the overall goal of the cash flow statement, to explain the change in cash. So it's not labeled as an operating, investing, or financing because it's throughout the entire statement of cash flows, okay? So that one has an NA to it. You don't want to make any specific adjustment for cash, but in the end, your totals of the operating, investing, and financing activity should be that change in cash. And then, as a further step for a check figure, your ending balance on the statement of cash flows should equal what the ending balance is of your most recent balance sheet for cash, okay? All right, the next one I'll point out is accumulated depreciation. Here I have two for operating and investing. Why? Well, for operating, accumulated depreciation increases when we increase depreciation expense, right? Our journal entry is debit depreciation expense, credit accumulated depreciation. So it would be operating because if we're doing the indirect method, our first step, as I have listed out here, is to add back depreciation expense. So that's where it fits into the operating section. For investing, think about when you dispose of a piece of equipment. You have to get rid of the cost of the equipment on your balance sheet, the fixed asset, but you also have to get rid of the accumulated depreciation. Therefore, if this account changes, it can also be because of a disposal of a fixed asset, and that would be under the investing category. So that's why we have investing here. The last one that I'll point out is under retained earnings. We have operating and financing. Well, retained earnings is a product of net income and dividends, right? So net income fits in the operating section because it's our starting point if we're using the indirect method. So that's where retained earnings could relate to operating activities. But it's also financing activities because the second part of calculating retained earnings is the dividends. You subtract dividends paid, and dividends paid goes in the financing section. So we have each of these other ones listed out as either operating, investing, or financing, a single category, okay? These ones could be multiple or none at all. Taking this information, we can jump right in to step 3, right? Step 3 is to drop these numbers into our format. And really, once you've done this becomes very simple as long as you understand what the format is, okay? So, moving along, put up your header here. I didn't have room, I couldn't reach that tall to get the header, but you want to put the header for the statement of cash flows. So listing out the actual statement, the date, the company, etc., etc. Then we go on to each section. So the operating activity section is our first one. We start with net income. Net income they give us in the problem, it's 95, so we'll drop that number in. That's in that first paragraph before they show you the balance sheet. The next thing they give us also in that same paragraph is depreciation expense. They tell us that it's 35, so we're going to add that back. That's our first step. Whenever we put down net income, we then add back depreciation expense. Now we adjust for our changes in our current assets and current liabilities, but honestly, we don't even have to look at which ones are current assets or current liabilities anymore. We've already done that step for us. By labeling these as operating, investing, or financing, all we need to do now is search for the O's. So first one, accounts receivable. Accounts receivable goes up. Accounts receivable is a current asset, so we do the opposite here. We're going to subtract 100 for accounts receivable. Next one, inventory. Inventory goes down. Inventory is a current asset, so we're going to add that. It's 125. And the next one, wages payable. Going down here, wages payable has gone up 40. So we're going to go the same way, 40. That is, the current liabilities goes the same direction, and that is our last operating one, giving us a total of 195 for operating activities. And notice the subtotal we've used here is net cash flows provided by operating activities. Now, real briefly, why did I skip over operating here for accumulated depreciation, operating here for retained earnings? Well, with accumulated depreciation, we said it was operating because of depreciation expense. We've already adjusted for that here. And for retained earnings, we said it was operating because of net income, and we've already adjusted for that here, okay? So moving on to our next section, there's no other O's listed out there, so moving on to our next section, investing activities. Looking for the I's here, we listed out equipment. Equipment went up 60, so that was told to us. We had a purchase of equipment, so if it's a purchase, it's gonna be an outflow, right? We're spending cash to get this equipment. So that's an outflow of 60, and they tell us in the problem also that they purchase equipment for 60. Looking at this I here for accumulated depreciation, we don't have any effect on accumulated depreciation for investing activities, and we can tell, one, because the problem didn't tell us, but two, we can look another way. Notice that depreciation expense, the problem tells us, is $35,000. And notice that accumulated depreciation increased by $35,000. Therefore, the entire change in that account is made up of this change in this account, right? Therefore, we know there were no disposals that we have to record. So there's no other I's listed out, so investing activities is complete. We can say that that's a outflow or cash used in investing activities of 60. Next section is financing activities. If we look at our F's here, financing activities, 1, long-term debt. Long-term debt increased by 70. That's going to be an inflow. Why? We're issuing debt. We get cash inflow to the company. When I say we, I'm talking about the company. So 70 is listed here. Next financing activity, contributed capital. Well, there's no change, so that's 0, so nothing to list here. And then finance activity here for retained earnings. Well, this financing relates to, as we spoke earlier, dividends paid. If we look at retained earnings, we see that retained earnings only changed by 95. It went up by 95, right? Well, in that instance, net income here was 95. So that increase of 95 here is explained entirely by net income. Therefore, we know we have no dividends paid. But also, as a second check figure, the problem doesn't tell us about dividends paid. Therefore, we know that we've done all the financing activities. So financing activities was 70, and that's provided by financing activities. This gives us a total change in cash of $205,000, and this agrees to the total change in cash that we calculated up here. If we add the beginning balance of 35, which they give us in our comparative balance sheets, we get an ending balance of 240 for the statement of cash flows, and that agrees with the ending balance that we have for the most recent year and the comparative balance sheet. So this is a representative example of something you might have to do on your exam, and you might do in practice as you get into the work field for a statement of cash flows. And even if you weren't to ever create this on your own when you get into practice, you might have to at some point be able to analyze or review a statement of cash flows, even if not for work, for your own personal investments. Therefore, understanding this, being able to create it, allows you to be able to analyze it because you understand each and every component, okay? If you have any questions about E12-7, please feel free to email me.